8th, 2024. Great to be with all of you today. And what is today? It is Eclipse Day. Check out my shirt. You can see I'm in Buffalo today, this morning, and for one more day, and I'll be driving home tomorrow. But I'm here to watch the eclipse because it is going to pass right through the center of the city of Buffalo, and I'll be wearing these things. As you can see, I can't see you guys, but I'll be able to look at the sun and say, wow, look at that eclipse. So I'm kind of looking forward to that. It's going to be fun. So just a really quick version of the Daily Bites today. Again, I'm in Buffalo at some very good friends of our houses in Buffalo. And you can see here's the place right here. And so markets had a really strong day on Friday, of course, after the jobs report came out. Nearly recovered all the losses from Thursday's debacle. That was a we were up strong, and as the Fed speakers started talking about maybe a much more hawkish monetary policy, and there was some other news that came out too. It didn't really matter. When the selling happens, it happens in a big way. Algorithms start selling. Big investors say back off. And you see some hyper trading going on here, program trading, high frequency traders going on, and it just collapsed the market, more than 2% down from high to low on Thursday. But again, we had a good recovery on Friday. We'd like to see a good bounce back today. We've seen rates starting to rise up on the long end of the curve today. 4.4 seems to be kryptonite for traders, especially small cap stocks like the Russell 2000. So yeah, I don't think we really want too much of a rise in the 10-year yield above that 4.4% level. I think the market, if you look at Fed fund futures, have pretty much backed off a lot of rate cut expectations. I think they're looking at about 2.5 rate cuts, which is really where the Fed is at right now, too, according to the projections from December, and the last projections came out from March. They're about 2.5% rate cuts, back down to about 4.6% on the Fed funds rate for 2024. Now, of course, they're going to be paying attention to the data. We have a lot of data coming out this week. CPI coming out Wednesday morning before the open. We have the PPI number also coming out this week, and that's Thursday morning before the open. Now, let's remember something. The last 2 months, January and February, CPI and PPI numbers were on the hot side, and it caused a little bit of angst in the markets, and we pulled back a bit. We did rally back up afterwards, but still, a third hot number for the March series is going to be concerning, and I think a lot of people are going to start taking back their expectations for any rate cuts in 2024 if that number is hot. So I think I was looking at the Cleveland Fed nowcasting for inflation. They're looking for about a 3.6% year over year increase on the month to month number. PPI number, I don't have an estimate on that just yet, but I think it's a little bit weaker. Don't forget as well, too, we've seen a good rise in commodity prices. Gold is at near all-time highs. Crude oil has been strong and above $86 a barrel. So that is going to be a huge hit for the consumer and for producers and so forth. So that also has to be monitored. So by and large, I think what we can take away from some of the data recently is that we can certainly celebrate a really strong economy right now, and that's due to the fact that the job and labor market has been robust, has been strong. Wage growth has been steady. We've seen good, strong growth from some of these companies, and we're going to hear about it a little bit more this week with trickling in from the financials and the banks on Friday, Delta on Wednesday morning, but on Friday, we'll hear from JP Morgan, BlackRock, Wells Fargo, Citigroup, along with State Street, and Progressive Insurance. So a lot more numbers coming out the following week. But I think by and large, you don't really want to be too cautious during earnings season, meaning you don't want to be bearish. You certainly don't want to be bearish. You don't want to be too bullish here, but we just want to kind of let the markets tell us how to proceed and what to do. So certainly, we have a lot to digest this week. I will be back on Thursday morning, back home at the home base, doing the Daily Bites as well. But I appreciate everybody spending a little bit of time with me this morning. And if you're in the path of the eclipse, enjoy it. And it's going to be about 3:18 Eastern time this afternoon. So I may or may not be around in the chat room for you the last hour or so. I'll be watching the eclipse, and hopefully everybody stays safe and enjoys the something that happens very, very rarely. I think the next eclipse would be in 20 years, but something to think about here. Here's an eclipse that's happening today. This is something that's been happening on our planet for millions of years. So it's something that we can relate to for a short period of for today versus different time periods in the history of the planet. So it's very it's fascinating. So anyway, this is my little spiel there. So anyway, have a great day. Have a great rest of the week. And don't forget, CPI number comes out on Wednesday morning. And then Thursday morning, the PPI will be coming back at you on Thursday morning. Have a great trading day. And I'll see you guys all on Thursday. Take care. Bye.